Hello, and welcome to our latest dairy market update. Today, we are going to look at how the markets have adapted to the new normal now that lockdown has been in place for 2 months. The start of lockdown caused major disruption in the dairy markets, but in recent weeks we have seen things begin to stabilise. The loss of the food service sector initially led to a loss in demand that was being only partially offset by higher retail sales. However, in more recent weeks there have been signs of balance. This chart shows how weekly demand has been changing week on week, split by product. It is based on Kantar retail sales and estimated food service losses, but converted into milk equivalents. Here you can see that after the initial big swings, caused by panic buying and then lockdown, demand for milk has been slowly returning to balance. In the weeks ending 26th of April and 3rd of May, demand for milk was roughly back in line with where it was before the COVID-19 lockdown. However, it has slipped away slightly in the following weeks. As well as changes in demand, we have also seen changes in milk supply. The country's processing capability is dictated by demand for short shelf-life products and processors' capacity to make long shelf-life products, such as cheese and milk powder. We can see in the blue line on this graph that this capability has been variable in recent weeks. Initially, several processors asked their farmers to reduce milk production, aiming to avoid an oversupply. Following this, we saw a slowdown in the growth in daily milk production, despite being in the run-up to the peak, a clear sign that efforts to curb milk production were having an effect. In fact, our estimates suggest that total GB milk collections for April were 23 million litres lower than they would have been if reduction measures had not been taken. The route the production would have taken can be seen in the green line on the graph. If reduction measures had not happened, our estimates suggest that there would have been a risk of excess milk in the middle of April and again in mid-May. Instead, daily milk production followed the grey line and stayed within the country's processing capability. Although the market is starting to become more balanced in terms of overall demand for milk, the impact on individual processors is still variable. Those supplying to food service markets will still have more of a struggle to find new homes for their product. It is also likely that a fair amount of product has gone into storage to help alleviate oversupply in the short term. The EU Commission opened its private storage aid scheme in early May, and the entire UK cheese allocation of 4,500 tonnes was filled in the first week. The government has set out its steps for easing the lockdown, and several food service companies have announced that they are starting to reopen stores, though with social distancing measures in place. It is clear that any return to normality will be gradual and take time. Therefore, it is likely that markets will have to continue to operate under this new normal of COVID-19 restrictions and continue to adapt as they change. Regular updates on milk production and retail sales, along with analysis on market movements, are all available on the AHDB website via the Coronavirus Resources page. Here, you can also find links to relevant podcasts, webinars, and answers to the most frequently asked questions. We also have a new support page for dairy farmers, providing guidance on managing the financial impacts and technical changes on the farm that you may be facing as a consequence of the coronavirus outbreak.